Well, paying off your home loan in 10 to 15 years time or any time way before the 30-year loan term is a goal, because that means I can retire earlier, or I can work less, or I can start investing more because of my assets. So like I said to you, you don't need to sign into courses and go into seminars to learn how to pay off your home loan faster. So you just need a good team around you, like a good broker, a good accountant, a buyer's agent if you need it. Now, I want to make it clear, this is not financial advice. I just want to show you a guide in how it's done. Good day everyone, and thanks for joining me in another episode of the Mortgage Chat. I'm your host Tony Xia, and today we're going to talk about how to pay off your home loan in 10 to 15 years time. Well, paying off your home loan in 10 to 15 years time or any time way before the 30-year loan term is a goal, right? It's everyone's dream, because that means I can retire earlier, or I can work less, or I can start investing more because of my assets. So you're probably seeing a lot of ads from Facebook, Instagram, TikTok, from companies that's trying to advertise themselves to say, hey, do you know what? We can help you pay off your home loan in 10 and 15 years time. Well, do you know what? And that's bullshit, right? Because a lot of these companies are just trying to attract you, clickbait you, trying to get you to sign up to the mailing list, sign you up to a seminar, sign you up to a course. And do you know what? Once they get you into that course, they're going to try to sell you off the plan apartments or house and land packages. Now, and I can't say all apartments are bad, because back in 2015, my clients actually bought off the plan apartments in Brisbane area, which they've done really well and they've sold it today. But I reckon if you purchase an apartment today, it won't do so well. And house and land packages, I don't think house and land packages are that bad at all, because I've actually made some money on it and my clients has made some money on it. But not all house and land packages are good. Now today, this episode is not to tell you what you should and should not buy. It should tell you, hey, paying off your home loan in 10, 15 years time is actually no secret. And I'll show you how it's done. And what you need as a consumer is just to be educated in how can this be done and achieved. You may not pay off your home loan in 10, 15 years time. You may pay it off in 20 years time. But this gives you a guide in how some people do it within 10, 15 years time. I've paid off my home loan in 10 years time. Well, I purchased my property back in 2015, and I've actually paid off my home loan before 10 years. I purchased my first home back in 2015. It's 2014 now, and I've paid it off already. So which it took me around 9 years to do it. And I'll show you how I've done it. So like I said to you, you don't need to sign into courses and go into seminars to learn how to pay off your home loan faster. So you just need a good team around you, like a good broker, a good accountant, a buyer's agent if you need it. You need to purchase good assets, right? And you have to play the long game. Don't think of, I'm going to retire in the next 4 or 5 years. Think of a long game. Hold the asset for 10, 15, 20 years. All right. So how do I actually pay off my home loan faster? Well, the first and simple way is, if you don't want to invest, is you pay extra into your home loan. Now, say you got a $1.2 million property over a 30-year loan term and it's 6%, right? If you pay an extra $1,500 per month into the loan, or you pay that $1,500 into the offset account, you can actually pay off your home loan within 20 years time, which is not bad, right? So if you're 30 or 35, you got your home loan today, you paid extra into your home loan, you can retire, pay it off within 50, 55 years old. And the second option is you invest in stocks, invest in property. Hopefully in the long term, it goes up in value, you sell it, you make a profit, the profits, you pay taxes on it, and you use whatever's remaining to pay down your owner-occupied property. It's simple as that, right? Easy, right? Or you can do a combination of both. Money in the offset account, extra payments into the home loan, and you invest. But today, I purely want to show you how you can pay down your home loan a lot faster with property investing. Now, I want to make it clear, this is not financial advice. I just want to show you a guide in how it's done. And please only use this as a guide, because everyone's financial situation is a little bit different. Everyone's equity position is a little bit different, and your income's a little bit different as well. And anything can change today, tomorrow, next year. Okay, so here we go. I'm going to go to the whiteboard right now. So if you do have time, just watch the video on YouTube. Watch this part, because the whiteboard explains everything. Okay, so as you can see here on the whiteboard, I've made a little plan right here. Okay, so let's just assume we have a couple right here that has an owner-occupied loan that currently has a $1.2 million home loan on it. Okay, so on year one, they've built up a bit of equity, and they can invest in their first property. That's why I put year one here. So on year one, they purchased a property for $500,000, an investment, call it Queensland, whatever you want to call it, okay? And we're going to assume in 3 years' time, which is year 4 now, that 3 years' time, every year is going to be compounded by 8% growth every year. So that $500,000 property now has a value of $630,000. Okay. Now, because that property has built up equity on it during those 3 years, they're going to take equity from this property and they're going to use it to purchase another property. And let's assume this property is worth $630,000 as well. All right. So let's say in another 3 years' time, let's just assume these two properties again in the next 3 years, it grows by 8% every year again, compounded. Okay. So now it's year 7. So year 7, these properties are now worth $793 and $793. And now they've built up equity again. So now they're using equity from this property and this property to purchase their third property, which is this property for $793,000 again. Okay. The property is going to be compounding at 8% interest again every year for the next 3 years, right? So now we go to year 10 now. So year 10, these three properties are now worth $1 million each. All right. So do you know what? It's only 10 years because they're still young, right? So they're going to hold the property for a little bit more longer. And let's just assume they're holding the property for another 3 years. And let's assume again, the property market grows by 3% every year again, compounded. Okay, so in 3 years' time, again, these properties are now worth 1.26, 1.26, 1.26, which gives you a total value in year 13 after investing 3 properties. All 3 properties are now valued at $3.78 million right here. Okay, so let me turn around. All right, so as you can see here, the debt that we've accumulated over those last 13 years is $500,000, $630,000, and $793,000. And we're going to assume all these loans were always interest only. And why? Because they got an owner-occupied debt of $1.2 million they have to pay down first, because that is non-tax deductible debt. All right, so assuming they've sold all the properties in 13 years' time. So you probably don't want to sell all those properties in year 13 because you know what? You're going to cop a massive capital gains tax, right? So you'll probably talk to your accountant and your accountant will probably advise you to, you know what? Just slowly dilute them every year. Okay. So in this scenario here, let's just assume they've sold all properties in one hit to make the math a little bit easier to understand. Okay, so as you can see here, the total asset after year 13 is $3.78 million. All right, now the total debt that we've accumulated is $500, $630, $793. And the total debt over the last 13 years is $1.923 million. So if I sold all my properties at the one hit for that amount and minus my debt, my profit is actually $1.857 million. Okay, so that is not bad. But however, there's a few things I want you to consider, right? There's selling costs, right? And also stamp duty I didn't include. So let's just, for argument's sake, all those 3 properties that we've originally paid $100,000 worth of stamp duty on it. Okay, so minus that by 100 grand in selling costs. I don't even know what the selling cost is these days. Okay, so let's just say 2%, right? So let's just say for argument's sake, you know, you're probably left with, call it for argument's sake, 1.7 mil. For argument's sake, so just to make life easier. So obviously you have to pay capital gains on it. But as you can see here, right, 1.7 mil, right, and your loan, see here, I'll put $920,000 remaining here. So what I've done here is I've assumed that they made minimal repayment over the last 13 years. So from $1.2 million paying 6% at principal and interest repayment, at year 13, they would have paid the loan down to $920,000, making minimal repayments. So what I mean by that is not a single extra dollar into the home loan and not a single dollar into the offset account, okay, which we all know they would be making some extra repayments or money in the offset account, okay. So we're just assuming that. So at a minimum, their loan is going to be $920,000 at the end of year 13, which is when they sell the property. As you see here, the profit is going to be around $1.7 million after accounting for stamp duty, selling costs, solicitor costs, whatever you want to call it, okay. So you can see here, hey, do you know what? They're going to make a big profit, right? So this is a way in how some investors are actually paying off the home loan within 10, 15 years time. But as you can also see here, right, by the time it hits year 13 and they purchase the property at, let's call it 35, they're still going to be under 50 years old. So do you know what? They probably won't even sell all of these properties in year 13. They probably keep on going until more closer to retirement age, or they start diluting the property, okay, slowly, you know, 1 every 5 years, 1 every 2 years, whatever you want to call it, okay, or even dilute it when they stop working, so the taxable income reduces. Okay, so here it goes. This is a quick example on how to pay off your home loan faster. All right. So as you can see here, there is no secret sauce in how to pay off your home loan a lot faster. You guys just need to be educated instead of getting all these clickbaiters, I'll call them, to, hey, do you know what? Sign up to our little courses, sign up to our little seminars, let me teach you, blah, 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 let me sell you an off-plan apartment. No, it's not like that. This is what it is, right? Obviously, look, there's a few assumptions, right? You know, it's gone by 8% every year. That's an assumption, okay? You know, or you can afford all these debts, right? Like that debt, 1.2 mil, 500, 630, 793. And I'm assuming your income can actually achieve such borrowing power, right? So you could be a substantially lower value on this property purchase, okay? So guys, that's just a quick introduction in the way how investing can actually pay off your home loan faster. And the reason why I really wanted to do this video because I'm tired of these clickbaiters trying to lure you in, selling you all these dreams, but it's also all bullshit, right? So, you know, look, it is what it is. If you do enjoy that sort of stuff, go for it. But you know what? I just want to show you how it can be done. But, you know, buying the right asset is actually very important as well. Okay, so I'm going to give you a quick example. You know, I purchased my home loan back in 2015. And back then I paid actually $800,000 for it, right? It was a home. And now you probably can buy an apartment, right, for that type of money in Sydney. So, you know, let me give you a quick example of what I've done. Okay, so I purchased my property back in 2015. End of 2015, I remember. We purchased the property for $800,000. And so it was a house, it was an apartment. And slowly, gradually, I paid off the home loan pretty fast because I was on a pretty good wicket and my wife was still working at the time. So we actually paid off our home loan quite quickly. And recently, we just sold one of our investment properties because we wanted to reload that debt in another asset class because we just felt that asset that we were holding wasn't doing as much as what we wanted to in the current market. So yeah, look, we made a bit of profit. And do you know what? We actually used that money to pay off the remainder of our home loan, right? We still kept other assets. But for this particular asset, we made enough to pay off our home loan. And guess what? Now that we've paid off our home loan, I have no non-tax deductible debt. Okay, so my home loan is actually paid off. So now I can actually take equity from that property and start investing even more, right? So that's the power of leveraging. And do you know what? I've essentially paid off my home loan. I have no non-tax deductible debt now. Okay, so any interest that gets charged on my home loans are now tax deductible in investment use, so which reduces my taxable income. So the example I showed you on the whiteboard is a little bit harder nowadays, right? Because the prices just went so high. So that's why a lot of people have to invest interstate to make it happen. But back before COVID, 2019, you know, areas like in the Western Sydney area, call it Wayland, Wilmot, Herbisham, Durrick, right? Average house prices around there was around $450,000, you know, decent sized block, a house, you know. It was a little bit rough, but you know what? Nowadays, average house price around those areas is actually in the mid $700,000 to $800,000. Right, so in the space of around 5 years, average price on the area went from 450 now at least minimum 750. Right, so you can actually see just because it's a little bit more rough area doesn't mean there's no growth. Okay, and do you know what? People don't even have the opportunity to invest into those areas anymore because the price brackets are just too high. So that's why they go into areas like WA, South Australia, Queensland, and do you know what? Look at them boom. Okay, so. All right, it's a little bit harder to do now, but you have to look for the right opportunities in different areas, different states, price brackets that suit your needs, that's affordable to you to make this happen for that long-term growth. Okay, so guys, that's an example of how to pay off your home loan a lot faster. And I'll just use myself as a quick example as well. Okay, so if this is something that you've always been thinking about, if you're a first-time investor and you're in Sydney, you don't know where to invest, right? Look, I have to say it, you have to engage in professional services like a buyer's agent if you don't have to do your own research. There's a lot of tools out there that allows you to do your own research, right? But do you know what? Buyer's agents actually helps a lot more because sometimes they actually travel to the area to look at certain locations, right? They do all the groundwork for you. Look, they probably cost you around 10, 15, 20 grand. Okay, but so be it. Sometimes it's the cost of doing business. Okay, if you have the time, the effort to do that yourself, then obviously you just do it yourself. Okay, but you know what? As a business person that doesn't work 9 to 5, probably work, I don't know, 9 to 8 sometimes because I have a kid, I'll be engaging in a buyer's agent myself. Okay, so guys, hope you enjoyed this video. Hope you like the content here, and I hope to see you next time.